Hello, this is Carlos Asilis from Glovista Investments, here to share our market outlook for the week of July the 12th. First, a brief recap on this past week's major macro and market developments. At the macro level, the calendar continues to confirm a rotation of growth momentum leadership away from the US and to the benefit of the rest of the world. For example, for the US, three important releases this past week surprised to the downside. These included the June ISM services, the May JOLTS report, and also the weekly jobless claims data. They were all weaker than expected by the consensus. Outside the US, conversely, the data flow continues to surprise to the upside for the most part. For example, within the European region, Eurozone Markit composite readings surprised to the upside for a number of countries, particularly Italy, France, Spain. They also surprised to the upside for the UK. In the case of Germany, the numbers came out approximately in line with consensus. Out of the Asia-Pacific region, trade data out of Taiwan surprised significantly to the upside for the month of June. And also for Japan, the Eco-Watcher survey for the month of June surprised significantly to the upside. It is important to note that for the week, there were two important policy developments that provided a significant amount of comfort to risk markets. This included a surprise cut of 50 basis points in the reserve requirement ratio for China, conducted by the People's Bank of China. And secondly, the release of the minutes of the June FOMC meeting were unambiguously dovish. These developments have taken place in an environment in which the fundamentals backdrop for earnings has been quite uneventful. We're about to embark on the beginning of the second quarter earnings season for the US this coming Tuesday. And markets have become quite aware, as we've mentioned before over the last couple of months, as to the topping out process that we are witnessing in terms of liquidity conditions, in terms of growth momentum, and also in terms of policy stimulus, both on the fiscal but also on the monetary side. For example, this coming September, we witnessed the end of a lot of the excess unemployment benefits for the US. So against this backdrop of a juncture in which risk markets have been overbought, we've been witnessing episodic spikes in implied volatility, such as the ones we saw in the middle of this past week, with the VIX index rising to close to 21. For this past week, we've witnessed essentially a diverging performance for equities, in which US equities outperformed. US growth stocks in particular recorded a 1% performance, whilst international developed equities declined by about 6 basis points. Emerging market equities lagged by close to 2%. And we also witnessed a decline for US value stocks. In terms of moving forward, we are expecting the medium-term fundamentals backdrop, which remains very sound. We do continue to expect an acceleration of economic growth, particularly outside the US, as the Delta virus strain continues to lose some steam. We continue to favor value stocks over growth stocks. Within value, we continue to favor emerging market equities. Within the developed market value universe, we favor financials and materials in particular, with selected industry exposure to industrials and energy. We also continue to favor high-quality secular growth stocks, particularly US mega cap tech that continues to do quite well. For the calendar this coming week, it is a busy week. We witnessed the release of June CPI, PPI data, industrial productions, capacity utilization, and retail sales. We also witnessed the release of the Beige Book for the US, as well as the release of the June NFIB Small Business Optimism Index. In terms of diffusion indicators for the manufacturing space, we have scheduled releases for the Empire Manufacturing, Philly Fed, and also, of course, in the consumer sentiment side, the University of Michigan. This Tuesday, as we noted earlier, we witnessed the beginnings of the second quarter earnings season in the US with the release of JP Morgan results, Wells Fargo, Bank of America, and Morgan Stanley. With that, we wish you a successful week, and thanks for your time.